Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. As businesses stay private for longer and the number of public companies shrinks, investors are increasingly turning their attention to unquoted companies. Recent events have illustrated that the closed-ended structure of investment companies is particularly well suited to investing in these hard-to-sell assets. Today, I'm joined by three managers who invest in unquoted companies. Richard Watts, manager of Merian Chrysalis, which invests in later-stage private companies across Europe. Suresh Withana, manager of Adamas Finance Asia, which focuses on private Asian businesses. And Richard Matthews, co-founder of Augmentum Fintech, which invests in unquoted fintech companies. I'd like to start by asking you, Richard, why do you invest in private companies over public companies?
We actually invest in both private and public companies. The heritage of our team, the Merian UK mid and small cap team, has been in public markets. We've been very large supporters and investors in a number of IPOs over a long period of time. We actually were finding that many of those private companies that we were meeting on a path towards an IPO were choosing to stay private for longer. We recognised that if we didn't have a vehicle to allow us to invest in those private companies, we were potentially missing out on those companies that might not actually come onto the stock market for a number of years.
Right. Richard, why are you investing in private companies?
So we come from the world of venture capital, which has always traditionally invested in private companies, and that is what we know best, and that is the story that we are selling to our investors, is that we can provide access to those companies for them, companies which they cannot access through other means.
Right, Suresh, you're investing in Asian companies. Why are you investing in private companies?
Well, I mean, Asia is a very large playground, and we find that there's a lot of opportunities in Asia because there's a massive financing gap, actually, for private companies. It's a $2.7 trillion funding hole for the Asian SME space. So the number of opportunities and the breadth of opportunities across the Asian region is significant, multi-generational, if you will. So we find it a very attractive investment space to look for opportunities.
Right, and what sectors are you finding those opportunities in, Suresh?
Well, we're a sector-agnostic business, but as most people would know, Asia is an aspirational society, fast-growing middle class. So we see a lot of opportunities in sectors fueled by that growth in the rising middle income earners. So sectors such as healthcare, leisure, travel, education. I mean, these are all sectors that are throwing up very interesting opportunities for us at the moment.
Growth sectors in Asia.
Indeed, yes.
Richard from Augmentum Fintech. What sectors, obviously, the clue is in the name,
yes,
fintech.
Yeah.
Why fintech?
So I think our overall view is if you are going to specialise in an area, then it should be an area that has sufficient breadth and depth to enable you to do that, and we feel that's very much the case with fintech. What we find, or what we see in the market, is that consumers and SMEs are underserved by the incumbents, and we feel that there's tremendous opportunity for new players to come in and offer those consumers and SMEs a much better service at a much better price than they're being offered currently.
Right. And Richard from Merian Chrysalis, which sectors are you investing in?
So we've actually invested in a range of sectors, but particularly in fintech, e-commerce solutions, software as a service businesses. So for us, what we are looking to do is to invest in businesses that are highly disruptive. So those businesses disrupting, massive industries, for example, the banking industry, but where these businesses compete on price, on service, and proposition. So a whole range of sectors and opportunities, but crucially with companies fitting that kind of investment criteria.
Right. Now, what are the benefits of the investment company structure for investing in unquoted assets? Richard, what's your view?
You can look at this from two angles. What we find for investors, this structure allows them access to companies that they can't access through other means. Companies are coming, as you mentioned in your introduction, companies are coming to the market much later. There are plenty of sources of capital that are enabling them to stay private for longer. And you have institutional investors, retail investors looking, they know about these companies, they hear about these companies every day, but they have no way of accessing them other than through investment companies which provide that access.
Right. Richard, have you got anything to add to that in terms of the benefits of the structure?
Yeah, I think for us, one of the obvious benefits for this structure is the permanence of the capital. These are vehicles that can provide long-term supportive capital to the investee companies, unlike a venture capital type of fund where they'll often have sort of fixed lives of 7 to 10 years. When companies get towards the end of that life within one of these portfolios, there is a demand for liquidity. We don't have that kind of constraint within an investment company structure.
Yeah, and Suresh, I mean, you are quite unique, aren't you, investing in Asian unquoted companies? Do you think that investment company structure listed in London is a benefit for you?
Oh, absolutely. I mean, we have the fact that, as Richard mentioned, the permanence of capital, the permanent capital vehicle, enables us to take a lot longer term view in the companies we finance. And so because we're negotiating bilaterally with these companies on the terms of our investment, the fact that we are perceived as almost a partner, a strategic partner, who's not going to be looking for the exit the moment we invest, like a lot of traditional private equity and venture capital structures do, enables us to negotiate better terms, negotiate better governance, and also form, as I said, a partnership approach with the companies we invest in. So it's a huge advantage being in a permanent capital vehicle. And being listed in London brings a certain amount of kudos with it, actually, when you're investing in markets in Asia where people like to say that, look, I've got a London listed investment company who's now one of my partners.
Yeah, one
that
of
actually
the biggest
brings a benefit
exchanges in the world.
Absolutely, and one of the most international exchanges in the world. So there are significant benefits to having an investment company doing this.
Right.
And I think one of the other things that we've noticed is that for the investees, the permanency of the capital is a benefit that they don't get from traditional venture. But there's also the other sort of hidden benefits, such as the access that they get to the analyst community. So many of these companies have designs on IPOing themselves one day. It's great for them to be able to get on the radar of some of the analysts through their coverage of funds like ours.
So good publicity for them.
Yes, absolutely.
Right, now we're in uncertain times. So I'm wondering how the current economic and market uncertainties could affect the companies in your portfolio. Richard?
Well, I think when we actually look at our current portfolio, the weighted average rate of revenue growth in the portfolio is currently in excess of 50%. So this is a very fast-growing collection of investments that we have. So I think relatively we are very well insulated in uncertain economic times. So we have deliberately chosen to invest in disruptive companies. In our experience, disruption actually accelerates through difficult economic periods. So we feel very comfortable that this is a portfolio that can perform through an economic cycle.
Good. Richard, uncertainty in the fintech sector, what will be the impact on the companies in your portfolio?
Well, actually, I mean, as Richard says, disruption is an opportunity. So uncertainty in the economic environment is much more of a handicap, we feel, to the large incumbents that have many other problems that they have to contend with every day with their legacy systems, their regulatory burden. Whereas these simple companies that are doing one thing and doing it well are much better able to cope with whatever the wider economy throws at them.
Right. And Suresh, how about you? There's a few things going on in Asia at the moment.
There is indeed. You can pick a spot and there's always something going on in Asia. I think two things. I mean, firstly, uncertainty brings volatility, and that obviously affects the capital markets first, the stock markets, the things people read in the morning when they're having their breakfast. And most of our companies don't care about that in a sense because they're private companies. They're not accessing the capital markets. They're investing. Their investor is us. We're giving them the capital they need to grow. So in a sense, they're insulated from the capital markets and the volatility. I think over and above that, as a portfolio and as a business, we're a pan-Asian business. So wherever there is a hotspot, and like you said, we can name one, two, three on any given day, having a diversified portfolio across Asia insulates us from any specific country risk or any specific event-driven risk. And that's what we like about the way we invest. So we're somewhat insulated from that volatility at a portfolio level as well.
Great. Well, so looking forward, what is the outlook for your company going forward, Suresh?
I hate to say this, but the more volatility, the better, because as our fundamental thesis is that companies struggle to access the capital markets. There's this $2.7 trillion funding gap, and the more volatility, the more uncertainty there is, the more companies will stay private for longer, the more they will look for private capital, the more they will come to people like us, and particularly in Asia, people like us. So actually the outlook at the moment, with some of the uncertainty on the horizon, wherever you look in Asia and globally, is actually creating a lot more opportunities for private companies to say, you know what, I need to speak to someone like Adamas Finance Asia to get my financing in place.
Always good to talk to somebody who's liking the volatile conditions. Richard, how about you? What's the outlook for your company?
We feel optimistic about the outlook for our company, and it comes back to that rate of revenue growth. You know, it's very rare to find a portfolio growing revenues in excess of 50%. You know, compared to stock markets, that is substantially more. So look, I think that rate of growth, I think positions, you know, the company and the portfolio to do well going forward.
Good. And Richard from Augmentum Fintech, what's the outlook for your company? We hear a lot about fintech companies.
Yes, I mean, we are very positive. We do hear a lot about fintech, and fintech is one of those words that has become very ubiquitous and overused even in current times. But I do think we are still very, very early in the cycle. So if you look at many other sectors, travel, media, retail, they have all been disrupted, and the biggest players in those sectors are now newcomers. In financial services, that hasn't happened yet, but we feel that it will.
So there's more to come.
There's absolutely more to come.
I'd like to thank our managers for joining us today. Thanks very much. It's been very interesting to hear about some of the opportunities you are seeing in unquoted companies and why you think the investment company structure is the best way for investors to access these opportunities. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and you need to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. Thanks so much for watching.